Hey, what is going on, everybody? Welcome to a little midweek rapid review. Appreciate everybody joining live. Sorry about missing the weekend. Had a little family vacation with my family and wasn't able to do the live stream, but we're back and figured with all the chaos going on in the market, today would be a good day to sit down, break down everything that's going on thus far in the week, and see how we should probably handle going into the remainder of the week. So we'll go over everything, full index analysis, sectors, industry subgroups. We'll talk stocks and exposure levels, everything we need to finish out the week and make sure that we are handling this market properly. So, without further ado, it's time for the rapid review. All right, what is going on? What's going on, Liz? What's going on, Carl? Anytime, anytime. This is good for me too. I feel like I'm much more efficient doing my routines when I do some of this stuff on live just because I can't get distracted. So yeah, this is good for me too. And it's good to see some of the stocks and questions that you guys want to talk about as well. So as always though, this video educational informational purposes only, not financial investment or trading advice. You guys got the disclaimer on the screen. Read through it. Liz, absolutely. We'll definitely get through those stocks. All right, so first, let's just take a quick overview. Market trend. So I've switched my market stance to sideways officially today, with some of the just choppiness that we've been experiencing. Exposure levels, I'd say, really, this is one of those markets and then one of those times where you could probably be anywhere from zero to about 80% invested. I think a lot of it depends on when you got in on some of these stocks. I think a lot depends on your trading style. Are you leaning more towards the position side of things? Are you leaning more towards the swing trading side of things? What you've owned, how you've scaled in and scaled out of things. So a lot of variables on this. The reason I have 60 to 80% is I think that if your stocks are holding up well, this is very, very fair kind of exposure level to have. However, just as a caveat, this is kind of like my max exposure level in this market right now. Being that there could still get us hit a little bit more, things could get really, really choppy. Um, I don't want to be adding a ton of new risk right now, just in what's going on in the market. That's where I'm at 60/80. Personally, I sold some stuff off today. We'll talk about that to calculate my exact exposure level. I know it's less than 50 right now. Um, Again, I lean a little towards the swing trading style, so that's why I took some profits earlier, coming into the end of last week, and then I've been stopped out of a couple things as well. Webby trend. All right, so Webby trend has now turned to choppy with the interaction that we've had with the 21 EMA. If you're interested to find more about this, it should be linked in the description of this video, and it's Mike Webster's YouTube channel. He goes very in depth on kind of his 3-day trend and how he uses that, but signaling that choppy. But looking at my 50-day trend, this is just like a bigger, broader trend. The market is still trending upwards, right? We're still higher highs, higher lows, things like that. So overall, we are still in an uptrending market, just one of those phases of the market that things seem to be getting more difficult. And we do not know which way we'll go from here. Will we go deeper into an actual correction, or will we rebound really quickly? And that's the big thing you're going to hear me say a lot through this is nobody truly knows. Nobody truly knows. Position sizing and profit taking. Yep, 100%. It has been 49 trading days since the rally has begun. So pretty interesting to see that. This has been a really, really great market. A lot of profits to be made in this market. So can't always go up. Index performance. Let's go to daily. Sorry, this is all set up for the weekend. So today, pretty interesting, right? We had an opening gap up, and we'll look at this when we go to the index charts. For the day, we did have a kind of down day here. We have all for the open over here, and then their closing range kind of right in that middle range. So this is one of those days too where like this tells us a lot, but it doesn't tell us all we need to know. So we'll look at the indexes and see what went on during the day. But the big thing here, real big thing here, is the moving averages. The S&P, the Nasdaq, and the Dow, and the Russell all below the 10. The S&P and the Nasdaq below the 21 still, and then the Dow and the Russell above the 21. Still above the 50. We'll talk a little bit. We had some interaction around that area today as well, and the 200 right there. So before we start jumping in distribution days, because we might have to make an adjustment here, let's jump over and take a look at the indexes. Again, don't see my chart. Yeah, I wasn't looking at the chart just yet. I was just kind of looking at the stats on the screen. Now, hopefully you guys can see the chart. Okay. All right. So we are on the NASDAQ. We are on the daily. I predominantly look at the NASDAQ. Look at this, right? So we have our rally day start. We have the official follow through day. Wasn't technically a follow through day on the NASDAQ. It was on the S&P, but still, needless to say, I looked at this as a follow through day just because of the volume that we had on here was very, very high. Got above the 50, and we've been just churning higher and higher and higher and higher, turning higher and higher, higher. Now look at here, how just totally, totally different the character changes right here. We just went from pushing higher, higher, higher into this just abrupt drop. What's interesting to me is like this is one of those markets where everybody, even up here, has been saying this market's just so extended. We never even touched the 21 EMA. Which you would likely see in most markets as we're climbing up in this kind of somewhere around this time frame. What that tends to do is when you just go up like a rocket ship, sometimes you drop like a rocket ship. And that is exactly what we are witnessing towards the end of last week and towards the beginning of this week. The key levels that I really was focusing on was this yellow line, which was really the Tuesday, May 12th area and the May 19th area. You could see that we've kind of broke through that. And that for me was one of those big signals now where things could start getting really crazy. Not necessarily saying that we're going to go lower, but this can create a lot of chop. And we're seeing a lot more volatility in the market. We're seeing these bigger swings throughout the day. Even just today, we'll see as I go into the intraday chart, just the volatility that we've seen, the up, the down, the sideways, the chopping around. And that's just not the type of environment that we really want to trade in. We want these easy, just churning higher, higher, higher markets, not this like chaos. And that chaos is what can cause a lot of damage if we're constantly over trading in that market. So let's get back and just look at what went on today. Ignore the volume. That's not accurate, obviously. But yeah, like we said, we gapped up at open. Things looked like they were like, all right, things are kind of positive. And then we kind of instantly rolled over after like the first 15 minutes, first half hour. And we rolled over and we went pretty deep. And then halfway through the day, we then kind of turned back around, paused, and finished out the day somewhat of a strong move, despite the fact that we are still obviously down for the day. Same thing really, honestly, on the S&P. Now, what's interesting when we start zooming in a little bit and looking at what went on in the market. So we looked like we were trying to get above that 21 EMA, and then there was just clear resistance that met there. That is not a great sign, right? We ideally were hoping that maybe this was just a little shakeout. Maybe we're going to find support right at these lows right here, and then we're going to rebound and continue this trend higher. That's what a lot of us were hoping for. But the rejection at the 21 EMA, definitely something that was of a concern. And I'm sure there's a lot of people that just seeing that rejection at the 21 EMA intraday were like, you know what? I don't like seeing that. I'm going to start taking some more profits off the table or closing out some trades that maybe are my laggards. And you probably would have been good in doing that if that was the case. Because what ended up happening was, like we saw, we rolled all the way down. We rolled all the way down right to that 50 SMA. Very, very key moving average for the longer term trend. And to find support at there gives us some hope, right? So it's good to see us at least find support there. Trending upwards, find the support and kind of bounce right off of that. But we were not able to get back above these lows. We were still below the 21 EMA. We are still below the 10. And the other thing that we noticed was like right around here, things were starting to kind of get like there was just clear resistance at these all-time highs. So what I'm feeling on the market right now, based on all the price action, is it's like there's resistance here. The market was having trouble rebounding and going higher. Some stocks were acting okay. We saw this kind of volatility increase. We broke through. We were hoping to find support. We did not. We found resistance. We broke down here, found support here. So we're kind of in this sideways action. And that's exactly why I'm in sideways. There's resistance to the upside, looks like some support to the downside. Um, and the overall trend is up. Now, what that means for me as a trader is I'm expecting this action to kind of be just sideways and choppy. Anything could happen. We could rebound and completely skyrocket from here. This could have been a shakeout. We could break lower, and this could just keep turning lower and lower and lower. But given this market action, the highest probability I see is choppy sidewaysness, very similar to how today was. Finding support down here, finding resistance up here, and just kind of creating a little bit of chaos. Very, very similar to kind of the market environment that we saw here, right? Um, this support and just chop, 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 chop. Now, doesn't necessarily mean the end result is going to be a rollover like this, but kind of expecting something similar to that. And you can even see, I'm sorry, I'm kind of getting all over the place. Um, that there are other opportunities too, sometimes where we pull back here and things just rebound and stuff like that too. But I think my stance right now is more looking at that choppy action. Because even here, right, we started pulling down, broke, came up, braked again. Uh, Again, just what the market is telling me to probably expect based on this price action. Is this why you were taking profits at the end of last week before the bottom fell? Um, the reason that I was taking profits last week was just purely because of a couple things. Number one, the resistance at the top was kind of giving me a little bit of concern. But when I was looking at the stocks that I held, and we'll talk a little bit about that when I'll bring up like kind of where my portfolio was in the beginning of today, and then and kind of tell you what I did. But specifically SanDisk and MU, I'd gotten extremely heavily weighted in those two names. They were the leaders. They were acting well. I took profits and they pulled back. They gave me a clear secondary entry. I added back a ton with a really, really low risk entry. They took off again. And I was just so heavily weighted in those two names. And the market was starting to feel like it was seeing resistance. Those stocks were very extended at that point. And I knew in my head that if this was to happen, mentally it would probably crush. It would probably crush me. Um, so seeing the higher probability of a pullback and knowing that that pullback would likely look to even a normal level on those names really, really rough to my portfolio, I pulled a lot of those profits off. Um, Protect my mental capital. Stocks were extended, lock in some of those profits. Kind of a combination of everything. So not necessarily just one thing um, that led me to believe this was going to happen. And to be completely honest, I was in my head, I was more expecting that when we started breaking down here, we were going to probably find support either at the 21 or at these prior lows, maybe go sideways for a little bit, rebound. But obviously that's not what happened. So, um, yeah. So where we're at right now, it's really watching that 50. That 50 is really important, seeing us find support there and really watching the 21. Those are those two moving averages right now. Um, I think break above or below those isn't going to necessarily make me feel entirely comfortable to the upside or to the downside, just because of how choppy things look like they're about to get. But wanting to see us maintain above those levels or maintain below those levels is what's going to make me kind of make a little bit of a switch. I think really this is going to be one of those markets where it's all important to kind of be a little more patient, sit on our hands a little bit, be willing to let maybe some things go without us and let the market prove which direction it truly wants to go in at this time. I believe if I had to like really had to make a decision, I think we're going to continue higher eventually. I just don't know how long that is going to be. I think we had this really, really strong move. There's been a lot of great names. There's a lot of good stuff going on. Um, And this is just the market digesting the chaos. And sometimes, like I said, really strong up, sometimes means a really violent reverse. And then we might hopefully tighten up and go higher. That's what I'm hoping to see. Starting to look like August of last year. Let's see, August of last year. August. Yeah, so we had the big drop August of last year, but the difference here is we didn't really come into play to the end of August, beginning of September into the 50. So we were kind of going sideways through all of August, and it just wasn't, I don't think, as violent of a pullback. We also had some more interactions with the 21 last year. It just wasn't as explosive, which is probably what's leading to the fact of how much more violent this first pullback is. So and really truly, this is the first true pullback that we could be having. I'm not saying that's guaranteed pullback, but this is the first true downside test in in this uptrend. So we'll see how it pans out. I want to just see while we're here. Here's our weekly. So you can kind of see that and the S&P. Let's look at the Russell too. So positive to see the small caps acting this way, right? We're positive to see us break the 21 and then rebound and get back above it, but also, again, upside resistance. So seeing that very, very similar action, mid caps, very, very similar, but above the 21. So just, again, we're seeing these just big swings for the day, which is something very, very interesting. All right. Cool. All right. Let's go back to the dashboard real quick and go through some stuff. But that's kind of what I was talking about with this index performance, where this all kind of need to add some context to the up, the really far down, and then the bounce on the 50. And obviously you're seeing that right here. Distribution days. So when I was just looking at where we were at on the volume for today, because we definitely had the downside move. I'm going to have to update this after, but I believe we are getting a distribution day on the NASDAQ. It's very, very, very close volume-wise. If somebody else is looking at another volume source and can tell me definitively, let me know. But I think today is going to be a distribution day. So if that does happen and we do get a distribution day, here's what we're going to see. This is going to remain the same. The S&P is definitely not getting a distribution day today. The NASDAQ very likely is getting that distribution day, which is going to pull in this stalling day from 529. So that's going to bring us to a count of 5 distribution days on the NASDAQ, 3 on the S&P. So starting to see some of that distribution pile up. Definitely of concern. Let me see if this, okay. We did, because this is my, I kind of have this program too. All right, so we did get that distribution day. So we are going to add that. I can't add that from here, but all right. So that does officially make it. It's going to be 3 and 5 is what we're going to see because we're going to activate this. So definitely some clustering of selling coming into the NASDAQ for sure, which is just another reason to be of concern. I don't think it's a reason to just run and hide, but I think it's definitely a reason to probably really limit your trading and probably be reducing your risk in the market. All right. Sectors. Let's jump over to that. So looking at today, real estate, materials, healthcare, consumer staples, and industrials all up today. What else? Utilities, finance, consumers. So what really got hit was technology and energy. And that's what's really been kind of leading this market. Like if we look at, let's just say for argument's sake, the last 3 months, technology has been the massive, massive leader right here. Energy kind of has really given up a lot of those profits. So technology definitely getting hit. Technology getting hit the worst today. What we'll do is let's jump over to Deepvue and let's look at these sectors one by one and just kind of talk about where we're at. This is my daily. This has got to be pulled out. what we'll do is, this is what's cool about Deepvue. You can add these things in here. So I'm going to throw a chart in here so we can do this all at once. All right. You know what? I actually rather go with, bear with me. There we go. Okay. I like that better. All right. So we're seeing kind of what we were just talking about here, but let's start from the top. From a daily perspective. Actually, you know what? Hold on. Sorry, guys. I don't normally do this midweek, so my flow is not great. All right. We got daily here. We got weekly here. Let's zoom out here. All right. So first we got real estate. Look, strong today. All-time highs, almost right below all-time highs, but when we're like looking at here, it's like still in this sideways kind of action. So nothing that's like, oh, I want to start looking for real estate names. Materials. Materials is rough, right? It kind of, we broke below the 50, we rallied above, we kind of broke below again, more sideways action. Consumer staples, a little bit more, right? You see how this, we're kind of like, it's just very, very choppy. This, I feel like we're a little more defined bottom right here. We're trying to turn around. Healthcare has been showing a lot of strength in the last like week or two. As it started to kind of climb up from these bottoms, got above all those moving averages. Things look like it's kind of turning around. Almost like a giant cup with handle over here, but still. Industrials looking pretty cool, like a VCP type setup here and showing strength today. Utilities kind of collapsing on us. Financials looking like it wants to turn around, been one of the weaker sectors, hitting some resistance. Communications collapsing. Consumer discretionary looking like it wants to roll over, kind of another sideways more market. Energy. So energy broke down, still making those higher lows. Hasn't completely demolished itself, but it's been kind of in this sideways basing action. Still paying attention here. Tech, again, just absolute skyrocket, and broke down and pulled back. But the trend not completely gone. So, from a sector perspective, right, I don't think much is changing. A lot of these other groups right now that are kind of showing strength still have some areas of resistance. I think they still need to prove themselves. And I think the same way those need to prove themselves, I think energy and tech need to prove that they're done. And I don't think that is the case just yet. Right now, I'm just going to say let's keep an eye on these, but very similar to the market. Just some sideways action and nothing of a complete trend changer just yet. Double bottom action there. Just what were you looking at the double bottom? Let me see if I could, while you're, was it healthcare maybe? Maybe healthcare at that double bottom, kind of. But one of your earlier sectors, I think it might have been healthcare. Regardless, I think, like I said, I think just a lot of these groups really needing to, yeah, maybe healthcare. Yeah, healthcare probably. Yeah, definitely healthcare. So healthcare definitely sticking out a little bit, but technology and energy not writing those off just yet. All right. Again, just bouncing around. Let's go back over here. And let's start looking at my industries. This might need a second to load. Are we all up to date? You're up to date. All right. So let's talk what went on today first. healthcare, REITs, right? Some sport betting, healthcare, pet economy, healthcare. Okay, so healthcare, the really, really strong ones today. Space economy, right? We have SpaceX reporting this week. Not SpaceX IPOing this week. I don't really truly care why this is happening, but I'm assuming that's why it's happening. Rare earth metals, minerals, stuff like that, nuclear energy, quantum, which has quantum kind of looked like it was starting to bottom, kind of start that uptrend. Real explosive move from a lot of those names. So to see some weakness in there, not totally surprising as it's maybe starting to try to trend up. Solar, copper, defense drones, that's also an area. So a lot of names that we've seen some strength in. Mainly what it looks like today was the space economy, the drones, defense, and those metals and minerals really being the worst of the worst of what got hit. Rapid movers. Let's just see what's going on here. So we see in the real estate make a big jump here. Healthcare. So really seeing the healthcare stuff going on here. And as I'm doing this, guys, I'm kind of like, I'm digesting all this with you guys. So LiDAR, healthcare. So we're definitely seeing some strength coming in from the healthcare sector for sure. And then we're definitely seeing some dropping off of things like the nuclear, the crypto stuff, like the HUTs, blockchain tech, metals, minerals. We're starting to see some of the weakness coming into some of the things that have been, I would say, secondary leaders. Ranking wise, and this is going to be a little slower, we're seeing semis still up there, right? Semis hasn't dropped. AI, a lot of these AI names still up in the overall ranking. So really watching to see what kind of moves and changes. I think moments like this, sometimes it's a little too early to tell. Because this could just be a flash in the pan type of thing, and then we could see a lot of this stuff return after basing. So nothing that I would kind of hang my hat on just yet, but just giving you guys a quick look at where we're at right now. My industry groups, semi's still leading. You still have the AI stuff leading. You still have satellite, crypto, mining, AI, space economy kind of starting to roll back down. So we're definitely starting to see some things move up and down in these, and going to have to keep an eye on this. But the biggest thing I think from what we're seeing right now is healthcare showing a lot of strength. A lot of the drone, quantum, space stuff showing a lot of weakness. AI not completely falling apart just yet. What did AI do today? Let me see if I have. Can I do that daily? Bear with me a moment. I just want to see if we can pull up group details. Here we go. This just has my group stocks. All right. I can't see that, but we can look at some of those names. All right. So again, I don't think anything just right now to say like, oh my God, sell all your AI stuff. A lot of those names I think are pulling into key levels, possibly creating secondary opportunities, probably creating bases. So we'll see what kind of goes on. While we're here, news related, we have the consumer CPI report tomorrow, and then we have producers PPI on Thursday. All right, over to Deepvue. Let's start getting into some more stock stuff. So if you guys don't know, I am a Deepvue partner. This is the tool that I use for my stock screening, my chart analysis, my fundamental analysis, and really, really awesome tool. They've done a ton to really start getting this thing where it is like very, very innovative compared to whatever everything else that's on the market. They're doing it at a price point that's better than everybody else on the market. And as a CANSLIM style swing position trader, it just gives me everything that I need. And the customization is second to none too. So that's another reason why I like this, because I hate having a tool that's just out of the box and has too much noise and things that I don't want to look at. This allows me to kind of just put what I want to see in front of me. The updates they've made have been getting better and better and better. So let's go through what's going on with my portfolio. So I still own SanDisk. As many people know, like I said, I had bought on the April 8th day right here. I had taken some profits somewhere in here. I added right here on this bounce, and then I had taken profits. I forget if somebody remembers the exact day I took profits last week, but took some profits in here, and then we've kind of pulled back. And we're seeing things, the volatility start to pick up, but we are seeing some support right at the 21 EMA. So I had not completely closed out this position because especially I trailed 21 EMA. We did not close below that. Being a leader, this is a name that I definitely don't want to just sell at the first sign of weakness. I want to give it a little bit of room. I'm not the type of person that's going to ride this down all the way to the 10-day, the 10-week. I'm not going to ride this to the 50, which is very much about the same thing. But the 21 for me is something that I'm pretty comfortable with holding to as long as I'm not having an overweighted position, which again is why I reduced there. And the exact same thing happening at MU, pretty much identical. Sold in around here, added back here, sold a little up here, and now I'm riding that 21 EMA. So that pretty much the same. Taiwan Semiconductor now did the same thing, right? It held the 21 EMA, but just because I'm looking to reduce some exposure, I don't like overall how the market is acting, and kind of want to be prepared for the possibility of some new leadership emerging or some other names emerging. I took my profits in this and stepped aside. I think I think it was like a 15-ish% gain with my remainder of this. This name right here. So nothing wrong with this at all. I did remove this one, how the market's acting, combination with earnings tomorrow after market close. So it's just how the market's acting, the choppy environment that we're in. I took some profits here and stepped aside because even though I had the cushion I needed to hold in the earnings, given the market environment, I don't really feel like holding something like this into earnings, especially because it's an IPO type of name, could be a little more volatile. Twilio. Twilio. This one I basically sold break even. Was a really nice move here, buying early in the day. Great profits, completely reversed on me. Basically sold it a little bit better than break even. If this is going to be a leader, this will likely give me a secondary opportunity. I don't see this hitting here and then skyrocketing higher without probably moving some sideways. So that was another reason where I was just like, you know what, I'll just step aside from here. This name, so got stopped out of here. I had moved my stop up to a little below break even, kind of moved it up so I wasn't taking a full stop on it, and I got just stopped out on it. Is what it is. This is definitely a name that I'm watching very, very closely. Another one holding the 21 EMA, another one that look at this trend line that I had drawn it off of this. It was already in there and kind of hit right off of that. So yeah, still a name that I'm watching very, very closely. This has been one of those names that's just been a little bit of a headache for me because I've constantly got some profits, and then just given up profits on this name. So there's definitely going to do a lot of post analysis on this at some point. All right, let's go first through some of the names that people are looking to bring up. Dave, a lot of people looking at Dave. Financials starting to look a little bit better. Looking at the weekly on this. Well, actually, first of all, fundamentals on this name have been very, very good. We're seeing triple digit on the annual. We're seeing good sales growth on the annual. We're seeing overall decent earnings across the board. Great ROE, a little bit higher of an ATR. That kind of IPO due diligence phase through here. Riding back up, been forming this really, really long base. Pretty much almost a 1 year base of moving sideways, a little less than 1 year. Rallied really strong off those kind of lows, hit some resistance, and then kind of started going sideways. Definitely in a stage 2 uptrend. Been a little bit more of a choppy sideways stock. It's a name that's been on my list, as you can see with my little watch list thing right here. But just financials haven't been really, really strong. Companies like this haven't been really, really strong. Software hasn't been really, really strong. So falling into those two kind of categories, it was just something that there was other, there were other names and other things that I was really more focused on. But right now, this is definitely showing relative strength. And we can see that, it's the 12-month, not so great, but we're starting to see some more relative strength in these time frames as we broke above those 80 levels over there. Looking at the daily here, what I do like is that here it's just been like absolute chaos. We've kind of been making just range moves, then we're kind of making like lower highs, lower lows. Then we had again this huge, almost like a character change type of time frame where we went from the bottom straight to the top, full range move, hit, and then we kind of created this low. Not really truly a coupled handle, right? Because it's not like this clean pattern. But still, we saw, if you look at this from like a Darvis box perspective, right? We've just been chopping around, chopping around, chopping around. And now we're like starting to form like this secondary box right in this area. Almost like a VCP esque type of pattern where it's just like this big chaotic period, a tighter pullback, or maybe another tighter pullback. We're seeing some relative strength today, and we're sitting right below those highs. So I think that a lot of us are watching this because it really is shining in the chaos that's going on right now. Personally, with everything that's going on chaotically in the market and the volatility, I'm trying to sit on my hands a little bit more. It's been a really, really good start to the year, and no reason to get chopped up over trading. If we look at a lot of what went on last year, if you had probably stopped trading in October and didn't start trading again until April, you probably would have been better off, many of us. There was some profits to be had. I know I had a good January for sure, but still, that's just something to add. So, yeah, this name sticks out. It's definitely showing relative strength. It's definitely hitting all the boxes. It's just decide whether or not you want to add some new risk in a market like this. And if I was going to take a trade on this, it would just be a smaller position. Then we got ASTTH. All right, so this one, we're on the daily, right? Let's go to the weekly. Healthcare. So my concern here, right off the bat, looking at this weekly, is just a ton of upside resistance. This is obviously way, way, way back. But even if we go in now here to kind of last year, like we're just starting to maybe start making our way into that. Like we're just starting to turn the corner and possibly start uptrending. The fundamentals, yeah, I like the earnings. I like the sales on the quarterly. Okay, sales on the annually. Not great on the annual and the EPS. Let's go to the daily. So I see exactly what you're looking at here, right? If we took just kind of a line right across there. We've kind of very similar to Dave, right? We've turned around, we've hit, we pulled back, we've tightened up from a percent, from a percent perspective. So high tight flag-esque. The reason I don't like it as a high tie flag is because the resistance is kind of occurring inside of this consolidation versus breaking out, of eliminating a lot of upside resistance possibly from the left-hand side when you look left of the chart. And then it's just tightness really right at that kind of key level right around the February 14, 2025. So and it also doesn't have that clean 100% move. So strong, very productive. I wouldn't necessarily call this a high tie flag, but I could definitely see why you're watching this. It's just this is not my style of entering a trade, for sure. Oh yes, I had a sign off in October and would have had I signed off in October, I would have ended in a profit. Yeah, look, there's a lot of people that were in that very, very similar bucket. I overtraded a little bit through October. Luckily, I was able to catch myself in November and kind of sit on my hands for most of the rest of the year and maybe take a couple small trades in December. But You're not alone. I'm guessing, is this United Healthcare? Yes. Very, very similar. Very, very similar. I'm not going to go too crazy on this. This one kind of broke out. So trending upwards. Just curious if we were to pull into back to these lows, like a 10% drop. So I think this one, if you were going to enter it, this is kind of gone and went, kind of broke out already. I think really maybe, either today was really here to probably make the entry or maybe even here. One of those 2 days. For me, I think this is kind of gone and went. But yeah, healthcare looking strong. Healthcare looking strong. Let's talk about some other names. Right? SpaceX IPO looked like we were hovering right above that 50 and kind of bounced and chopped around right there. Not forgetting about this one. Just because SpaceX is coming out doesn't mean I'm ignoring these names, right? We don't know if SpaceX is going to be a later. It's going to be IPO. It's going to be, nobody knows how it's going to interact with the market. So still keep an eye on this name. UMAC. Good to see this find some support at the 21. Did break below the gap up low. Makes me want to now see this thing move sideways. Not a type of buy where I'm looking to buy at support at the 21 because I just know that this could likely chop sideways probability-wise. The damage from October, November helped me sit on my hands during March and now. Yep, it's lessons learned. That's what it's all about. It's all about not repeating the same mistakes you make in the past. Max Linear, this is a name a lot of us were watching. I had bought this and been stopped out of it before. And it now is below the 21, is below this kind of area where it was kind of giving you that high tie flag. And it's looking like it wants to climb its way down to the 50. But still, a lot of these names, just don't lose sight of these names. Like MU, ready? People talked about MU because it broke out when the market was really rough. It shook out, and then it was still showing relative strength as the market started to recover. So it got hit really bad with the market, but it was still showing some strength. So just don't forget a lot of these names that have been on your watch list just because it's been a bad couple of days and maybe they've shook out below some levels. This is on here. Not that I was going to buy. I was just kind of keeping an eye on some of those quantum names. Another quantum name, and this is what I was talking about. Like really strong move, and like especially around this time frame right here, the end of May. But this is what happens when you have names with upside resistance. This is why we wait toward these real, true, confirmed uptrends before we start jumping in on these names. Shorter term swing trader, I could see, or somebody maybe who likes buying like kind of those, I don't know the strategy very well, but maybe like those stock B episodic pivot type of things. I get it. But this is why I don't like buying those, is because a lot of times this creates chop. And this makes this not a clean trend, not as easy as a SanDisk, not as easy as an MU. Just trying to think of some of the other names that were out there. Those are those easier trades to hold for a decent move. This, I don't even want to try to pronounce it, but KLIC, definitely watching this, showing a lot of relative strength today. InNode, really been choppy. NBT, what's another one? NBIS, how'd that do today? Nope, NBIS. There we go. Looking like it's finding some support. No real entry on something like this for me personally, but still something I'm watching. Teradyne. What else did I miss? Sterling. Dio. Trying to see what else I have floating around in here. This kind of shook below those levels. Oh, BE. Didn't talk about BE. Another name I've been watching. Real good seeing support at the 50 and at this prior low. So keeping an eye on that. There's Dave in here. What else is in here? Cat. I'm watching this name. Cat showing some strength. GEV. Just riding that downtrend, man. Circle. Falling apart. Getting sloppy. CLS, get sloppy. So this is the other thing that I'm starting to notice, right? A lot of some of these prior leaders are just, they're getting sloppy, right? And I don't want sloppy market. I want things that are strong and moving and not chaos. So I think that's what happens with a lot of people. You try to chase things now that they're pulling into certain levels. You try to find the reason why this is the bottom, this is the low, this is where it takes off. But looking at things realistically, like, right, form, another strong mover, likely that this is not going to just sit here and take off. It's likely this is going to base. It can, but it's just, CLS, same thing. It's just been chaos. Like, a lot of these names look like they're probably going to want to move sideways. Lattice, I could see this rebounding from here with a little bit of chaos, but again, it's just the probability right now of a lot of these names looking like they're going to want to take a break. Now, Snow, this is interesting to me because, right, we had this character change, giant gap up on earnings, giant gap up, 36%. We have this resistance, again, where everybody wants, like, oh my God, I got to chase this thing. Resistance over here. We met, look how perfectly we met that resistance. Right? Like, basically closed right at that all-time high, reversed, but we held those lows. Right there. Trying to just, like, 10% off of those lows. So again, another one of those names, not really high type flag. That's really setting up because we're inside of a base, but seeing us turn around, possibly start really an uptrend, seeing us move sideways, seeing all that action. Like, these are the names that are standing out to me right now. Cybersecurity wise, and this is the other cool thing about Deepvue. I believe there's a cybersecurity one here. Okay. On the weekly. Same thing. Like, cybersecurity has been really strong coming off the lows. I'm now going to be paying like hyper focused, I guess you would say, on a lot of these names that showed a lot of strength off the lows, showed like they're starting that kind of Stan Weinstein Stage 2 uptrend. And now I'm hoping, like, even names like this, like, go sideways and give some entries. Hoping, right? Doesn't necessarily mean it's going to happen, but you got to be paying attention. Like, net, same thing, right? Kind of went right to the highs, came off the lows, and then now it's kind of pulled back. Palo Alto, Zscaler, really not looking good. That looking like the clear laggard. Likely, right? Huge. Everybody's like, oh, I wish I would have bought it. I wish I would have bought this. Very likely, given this rapid pullback, I'm expecting this to move a little bit sideways given how the market's acting. But these are the groups that I want to pay attention. See, CrowdStrike, same thing, right? Just below, closing below that that 21 EMA. Really, really powerful move off bottoms right here. Overall an uptrend. Like, these are the names that I really, truly want to keep an eye on as possible new leadership giving an opportunity. Avgo. Avgo is not really side. This is your big cap kind of semiconductor name over here. Most IPOs drop down, don't do much for some time. Correct. Yes. A lot of your IPOs, Rocket Lab's been, let's talk like Reddit, right? A lot of them will do this where they can just go sideways for a very, very long period of time, right? We had it almost a full year of just sideways action before this thing took off. Spotify is one of the first times I really kind of learned this. Doesn't necessarily mean that you can't have profits that can be made early on, right? So there are times like this could be a profitable trade, but then you kind of get, like, I call this the IPO due diligence phase. A lot of people call it, where it goes sideways, gets choppy until it makes that, like, really another, like, longer term move. where those big institutions are just kind of wanting to see how this company pans out. They beat, but not enough street. Avgo, yep. Earnings there. Gap down. 12% gap down. Looking at, let's look at some of those big cap names. So Meta not looking good. Google looking like it wants to take a break. Finding support at the 50. Amazon not looking good. Looking like it wants to go to 200. Microsoft resistance at the 200 rolling over. Apple. I don't know. I guess people didn't like what was talked about with Siri. I didn't get too into it today, but I know that was something that was released today. I think it was just more market related. Tesla just been very, very long sideways. Talk to Nick Schmidt about Tesla. He's a big Tesla guy. But Nick talks a lot about like that this has been just moving sideways for a very long time. And if it does break this all-time high level at some point, it's very likely to make a massive, massive move. And NVIDIA finding support at the 50. So yeah, there's just overall, right? If we're looking at the market, if we're looking at a lot of these stocks, like everything looks like it just needs some sideways action. Everything looks like the likelihood that we just bounce and rebound from here is smaller. It looks like there are some names that want to roll over. It looks like there's some names that want to find support. It looks like some names that are just, they're seeing that increase in volatility, which means likely it's going to be choppy. There's going to be some sideways action. And just not the type of environment we really want to trade in. And what it comes down to, right? And we could just even look at the QQQs. Like this has been a great, great market. This like hopefully you guys made a ton of money in here. You don't have to trade all markets. You can make plenty of profits in here, and you could sit out and be patient and undertrade versus overtrade. And then when the market starts to prep itself to say like, all right, now we have those low risk entries, is time to get in. And that goes to, I think, what a lot of you guys saw me post, whether it was in Discord, I put it on X, I put it in Reddit, I put it everywhere. Minervini, right? Everybody's going crazy because Minervini, let me see if I could bring this up. Minervini has, on the 8th, this was yesterday, he said, a few minutes ago, shorted the QQQs, still short the SPY, right? People putting some good memes on there, right? Oh, did we freeze up? Oh, man, why did I lock up? I locked up. What is going on? Did I lose you guys? I might have lost you guys. I'm still recording. That's good. Am I back? Okay, I'm back. Why does this keep sticking? It's weird. My Chrome is bugging out right now because everything that's on Chrome is bugging out. Everything's freezing up. All right. You know what? We spent some good time here. I think we went through a lot of great stuff. Hoping, let me see if I can close this stuff out real quick. Let's close that out. All right. You guys see me? You hear me? I think we're back. We're good. Okay. Something with that Chrome. Something with X just messed with everything really bad. Maybe Elon doesn't like me YouTubing X. That could be the case too. All right. So look, we're going to finish out here. That's aside from now going through some of my daily screeners, which I guess I could have did with you guys, but again, I'm not used to doing these in the midweek. It's just type of market to be patient, type of market to sit on our hands, type of market not to just sell anything too soon, right? Some of the names that are holding up, they have really good profits in that have been leaders. Maybe not the time to jump away just yet, like I haven't with MU or haven't with SanDisk. Not the time, I think, to be chasing a ton of new buys. Uh, just the kind of time to sit back and just keep doing the work and keep having a pulse on what's going on in the market. Don't lose sight of those prior leaders. Don't lose sight of maybe names that you had missed. Don't lose sight of those names and those groups that are starting to churn off the bottom with quantum, cyber, drones, um, that looked like they kind of shot right off the bottom. Keeping an eye on those, because if they're getting hit now, maybe they're going to go sideways, form a higher low, create some sort of an entry. But really keeping an eye on how this market is acting, really keeping an eye on how the industry groups are moving around, how stocks are moving around. And what we'd like to see is things kind of calm down a little bit. Now, if we rebound from here and we just shoot off to all-time highs again, there is a likelihood that some of these names are going to go on without me. And my big thing is, it's not that I will not take any new trades. It's just, it's got to be absolutely perfect for me to be willing to take a new trade right now with what's going on, how the market's acting, and just this chaos. And that's where I'm at. So appreciate you guys. Hopefully this was good for everybody. Helped me get my routine kind of done. Now I don't have to write everything up like I normally do. And yeah, we'll see what the remainder of this week brings. As you guys know, I'll do this again over the weekend. We'll hopefully have some more data. We're kind of in, like I said, that point where the market just doesn't know really truly which way it wants to go. And when we don't have a lower probability setup, that is kind of what, and that was, I guess, the point I was going to make with Minervini, right? Everybody bashes him when he sells MU into strength and it goes on higher without him. Now everybody's saying, oh my God, he knew the market was going to crumble, right? It's just the guy's playing his risk game. That's all he's doing. He doesn't know every single time what's going to happen. He's playing his risk. He's taking low risk opportunities. Sometimes they work, sometimes they don't. Sometimes he's right, sometimes he's not. And that is what it is about being a trader. If you want my full kind of rant about that, just go on X, or if you're in Discord, and you guys know I put it in there. I think I even put it on Reddit too. So that's all I got. YouTube link, X link, Discord link, Deepvue link in the description with discount codes. Questions about anything, you know where to find me. Reach out. Other than that, I mean this, and this, I say this all the time when I end these streams, but truly just pause for a second and hear this. Stay disciplined. Stay disciplined. Thank you, guys. Enjoy the rest of your night.